Talking to Austin Hill, who joins us here. AustinsBigWorld.com, columnist and author. Austin, how you doing?
I am well, sir. Watching the world go crazy, but always good. Good to be back with you and your listeners.
The Dow, at least early on today, taking it on the chin. What does it mean when China devalues its currency?
Yeah.
And because I'm just going to assume China owns so much of our debt that has to have a negative impact.
I think you're right about that. It means on the surface, it means exactly what the rhetoric says it means. They have arbitrarily said our yuan, which is their unit of currency, our yuan is worth less than it was yesterday. They've devalued it 2 days in a row. We're not accustomed to that here in the U.S., Patrick, because the relative value of the dollar, the U.S. dollar, well, our government doesn't just say, our U.S. dollar is arbitrarily worth X number of pesos or whatever currency you want to compare it to. That happens kind of organically, naturally in the broad global marketplace. We also don't say, a U.S. dollar is worth X number of ounces of gold. China has stepped in and just cut the value of their currency. They've done it 2 days in a row. And what that does, it's kind of a three-step process. And this is why it's hurting the stock market right now. For one thing, when the Chinese currency, the yuan, becomes worth less, well, that means the U.S. dollar is more valuable and worth more. That's good news for our U.S. dollar. Bar none, the U.S. dollar is the global currency of choice, the strongest currency all across the world. I don't think that means that our economy is incredibly strong, but we're kind of like the least worst among the currencies. What that does to American companies that trade on the New York Stock Exchange is that it takes fewer dollars to buy their products and services. Think about it this way. If each dollar in your pocket is worth more today than it was yesterday, well, you need to spend fewer of them to get the same stuff that you want. That means that, at least on paper anyway, the profits of American companies decline, and that's what's sent the stock market reeling. So it creates turbulence, it creates instability in the global economy and certainly in our economy. But that's kind of a three-step bullet point look at what's going on here.
Okay, so a down day on Wall Street, we've had those before.
Sure.
We've even had the Dow drop 200 plus points like it has at least early on. So that's happened before. But I got to think this maneuver by the Chinese long term could really be troublesome for our economy.
It could, and not the least of which, for a variety of reasons, but not the least of which is the one you just brought up a few moments ago, Patrick. They own so much of our government debt. China owns so much of us, is really the way to look at that. That they're going to have their way with us one way or the other. This is absolutely an economic warfare maneuver that they made. Now, that said, China has done this, I believe, because their economy is weak. What this will do, now that they've arbitrarily cut the value of their currency, that means we buy more stuff. Their Chinese manufactured stuff at Walmart and whatever store you want to shop in, that becomes cheaper. That means we buy more. That means they export more. This will likely have a stimulative effect on their economy. What that means for us, though, here in the U.S., back to your question about our economy, it makes it more difficult for American-made goods to sell on the open market because Chinese stuff just arbitrarily got cheaper. Ours has not. And so it makes it more difficult for us to manufacture. It makes it more difficult for us to even in many ways develop oil resources. It makes it more difficult for us to be producers in the global economy. And that's what China is trying to do here. I believe it's absolutely a weapon of warfare. I don't think most Americans are really seeing it that way.
Austin Hill, AustinsBigWorld.com. How does this impact the small business owner, which I know is really the area where you are focused on and concerned about the most?
Absolutely. That's the heart and soul of our economy, despite what the dominant news media wants to tell us. It's not about Wall Street or New York or L.A. It's about what happens in your community and mine. Again, this strengthens the dollar. That means that even local small business owners, at least from foreign business clients, they will take in fewer dollars when they sell their products and services. So that creates a pinch on the small business owner. But I think the greatest concern here is this creates instability in our economy. Look, we want our U.S. dollar to be strong relative to world currencies, but we don't like these wild swings. Bear in mind, it was less than 14, 15 months ago where the Canadian dollar was actually worth a little bit more than the U.S. dollar. So this creates yet another wild swing and more instability in the market. That, I believe, is the greatest challenge here. And also, again, the costs of things manufactured in China and elsewhere, those will decline. That makes it more difficult for local manufacturers, makers of things here in the U.S. to compete with that. So it creates a pinch on all of us. Wall Street is down. It's good for us as consumers, but the business owners are left stuck in the middle, and we need to remember that.
Austin Hill, austins.bigworld.com, at Ask Austin on Twitter, at Austin's Big World also on Twitter, and thank you for the insight on this.
Always great to be with you and your listeners, Patrick.